the stock on our radar. The company will be setting up a new chlorinated polyvinyl chloride, or the CPVC compound plant with a 35,000 per ton year capacity. This unit will be set up with an additional capex of 25 crore rupees and is expected to be commissioned by the end of this year, that is in Q4 this year itself. Well, Rima, you know, before I introduce the guest as well, it's important to understand it's CPVC compound. Okay. The company already has a capacity in CPVC resin. Resin is used to make the CPVC compound, and CPVC compound is then used in products like CPVC pipes. The companies like Astral and Phenolix Industries, they make CPVC pipes. So they are basically getting into the entire chain from resin. They are now getting into compound.
So now the company will be selling resins, plus they will be selling CPVC compounds, and part of the resin production will be used to making compounds.
Exactly. So they are basically getting into forward integration with this new expansion that the company has done. So just thought to explain that as well. Maulik Patel, the CMD at Meghmani Finechem, is joining us now to discuss this new update that has come by and a lot more. Maulik, thank you so much for joining us. Always a pleasure speaking with you. Just for understanding purposes, I wanted to know how much CPVC resin is used to make, say, 1 ton of CPVC compound. To understand how much of your own CPVC resin capacity will go into CPVC compound manufacturing.
Yeah, so currently we are manufacturing already CPVC resin, which is 30,000 per annum, and we are expanding to 45,000 tons per annum. And recently we have announced CPVC compound. So 1 ton of CPVC resin, which consumes 1 ton of compound, is around 0.8 of resin will consume in the compound manufacturing.
Okay. So in the immediate term, your capacity will be 40,000 tons per annum, right? It's only in Q4 of FY24 that it goes up to 75,000 ton per annum of resin, correct?
Yes. So total capacity will be, after our expansion of CPVC resin, our total capacity will be 75,000 tons per annum. And out of that, 35,000 tons per annum, we are going to make CPVC compounding. So which will consume around 28 to 30,000 tons of resin we are going to consume in-house to manufacture the compounding. So idea behind the compound forward integration is there are certain customers in India who are only buying compound, and they are focusing only on the pipe manufacturing rather than they are backward integrating themselves, buying resin, manufacturing, compounding themselves. So this will add our customer base who are only buying a compound in India.
So out of the 75,000 capacity of resin, 28 to 30,000 will of the resin capacity will be used for making compounds, and the balance 40 to 42,000 will be sold independently, right? Separately.
That's right. Yeah.
Okay.
Okay, all right. So how are you already in talks with CPVC compound customers? Who would your customers be? Which are the industries that you'll cater to? Since you've taken this decision for forward integration, you must have seen enough demand as well, because CPVC usually is imported. How big of a demand do you see it in the country?
So currently in the last financial year, India's capacity is around 250,000 tons per annum in India, CPVC resin and compound both put together. Out of 80,000 tons, compound is sold in India as a compound buyer. So we wanted to cater those compound customers who are buying recently the CPVC compound. So total market is 250,000 tons, and it is increasing around 15% per annum, because most of the plumbing application is converting entirely from the UPVC to the CPVC application right now in India.
Maulik, what will be the net revenue accretion? Because you will lose some revenues because part of your resin, production will be used in-house, right? So maybe you used, and then you will be selling those compounds. So what will be the net benefit to you?
Yeah, so if you just give you example, right now we are selling CPVC resin is around 150 rupees to 160 rupees in the Indian market right now. So it will add 60 rupees or 70 rupees kind of compounding. So net CPVC compounding, it cost is around 220 rupees per ton.
Okay, all right. So how is the pricing right now? You said around 60 to 70 rupees per ton is the spread, if I understood it correctly, that you would get in forward integration?
Yes, that's right. That is a value addition, as well as it consumes only 0.8 of CPVC resin. So 160.8 is only a resin cost.
So the net revenue, if you use the value addition of 60 rupees per ton, is about 21 crores on an annual basis, assuming full capacity utilization?
No, it is more than that. Along with that, because we have to add other additives also in the formulation.
Okay.
So that is additional cost also it will incur.
Okay. So, how is the pricing right now for CPVC? Because again, it's a commoditized play. It depends on crude prices as well. We've seen that going higher, but during COVID, we saw it plummeting to lower levels. How are you getting into a commoditized forward integration? What's your plan going forward? And what is the supply-demand dynamics right now in the cycle that we are in?
So right now, if you see, we are almost 70% was our bulk caustic soda manufacturing, and value-added chemistry was 30%. So gradually, as we are moving into the value-added chemistry, we are adding, I think quarter on quarter, our volume is increasing on the value-added chemistry and chemicals like CPVC resin, epichlorohydrin, and we are moving in that chain. So in next 2 years, our plan was 40% only in the bulk chemical, which is caustic soda, and the all remaining 60% revenue will come only from the value-added chemicals.
Maulik, you have a long-term guidance of achieving 5,000 crore of revenue by FY27.
Right.
As you move towards that goal, will there be any other strategic, big directional changes that you're looking to make in the company in terms of forward addition, backward addition, expansion, over and above what we've spoken about?
So as a company, we are already investing around 350 to 400 CR in a year, and we are going to continuously doing that. And majorly focus will be the import substitute molecule. And as like CPVC expansion and the chlorotoluene we already announced, which will commission in Q4 in India, which is a completely import substitute molecules, which is catering to the specialty chemical company in India, like pharmaceutical ingredients and the agrochemical ingredients, which is and we are going to add more chemistry, which is import substitute in coming times once we commission this CPVC resin plant and as well as the chlorotoluene plant in Q4.
Okay. And once all of this comes on stream, since you have a lot of plants which will be coming on stream in Q4, there is something like there's CPVC resin, of course, there's chlorotoluene and its value chain. What will the margin profile look like as that 40-60 skews in favor of specialty products?
Yeah. So along with the margin is one angle, but other than that, we are end segments. We are diversifying our total. Right now, we use 3 years before we were only catering to only 4 or 5 different segments end users. Now, after adding the value-added chemistry like hydrogen peroxide, chloromethane, epichlorohydrin, CPVC resin, now we are catering to almost 12 to 14 different end users. So that's why we are deleveraging our focus on one particular segment. And I think going forward, we are focusing more, targeting to more end users.
Okay, all right. We would have liked to chat more and understand your future business plans, because you've been talking about moving from commoditized play to specialized play as well. So how would that impact the company? But that for a later date. Thank you, Maulik, for joining us today and explaining to us what this new expansion would look like and what are the business dynamics here as well. Let's do one thing, slip into a short break. Up next,